Hi, I'm Clifford Bennett from Herston Economics. Another day. US closed last night. We've had some mixed information coming through. The key point to remember about these upheavals, if you like, in the Middle East, especially what's now happened in Egypt and we believe has now happened in Libya, in that the leaders have in fact been replaced. The key thing to remember is that these are positive for financial markets, positive for democracy, positive for free enterprise revolutions. They're not steps backward. They're actually steps forward. Certainly they create a lot of upheaval and distress in the short term, and there's an interruption to their domestic economies, but oil supplies will not be threatened. I mean, that's the dollars they earn. Everyone wants power to enjoy those dollars, but certainly you're seeing a sharp and sudden shift, as is the case always in history. A lot happens in a short period of time, and the Middle East is really moving now towards very democratic government systems. So it's all positive in the medium to very long term. It's extremely positive. It means more people in the world are opening up to capitalism, free enterprise, consumer society, and will be going quite hard at it to improve their own personal lots in a freer society. So you've got to remember that that's what these revolutions at the moment in the Middle East are. They're not a shift towards any sort of austere religious belief or anything like that. They're purely and solely a freeing up a democratic revolution, if you like. So that's important, and we're not really used to that sort of behavior. We're not used to those sorts of headlines in the West. We see violence in the Middle East, we always think it's a negative. If there is such a thing as positive, there are positives going to come out of this. So oil's through the roof. We've been bullish oil, enjoying the ride. Bullish gold, enjoying the ride. We think these trends are going to continue. It's a shame, therefore, these negative events, based on the news of these negative events, but still we're enjoying the ride. And we think that gold and oil will continue higher this year for the positive, good reasons of global growth, strong demand, and strong cultural demand out of India and China, particularly for gold, but also strong motor vehicle industrial demand in China and India for oil. Do not think for a moment that any of this talk about China flowing down because they need to control inflation is factual. This is this year's fiction novel, as last year's China bubble fiction book sort of, ran hot off the shelves for a while, but it never eventuated. Neither did the disintegration of Europe, and neither did the double dip in the US. This current scare about inflation in China triggering a slowing of Chinese growth is just nonsensical. It's not going to run its course. So any dips in equity markets that you're seeing because of this fear about China slowing, because of the fears about the Middle East, these are fabulous buying opportunities. By the way, I think the dip could go a little deeper, but they will be a buying opportunity. And I've always been thinking this week, probably Wednesday, Thursday, is when you'll see bull trends start to resume. On the Australian dollar, the dip in the Australian dollar has just scared a whole lot of nervous, short speculative longs, short-term speculative longs out of the market. That might continue for another 12-24 hours, but again, the Australian dollar is still going 103, 108 this year. So markets are looking good. All the news in the US, economic data, manufacturing data and sentiment indexes in Europe, strongest since they've been 2006. We're back to an all-round synchronized global economic boom. Have a good day.